Well, hello there, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective. That means each night we ask ourselves what happened today. What might we have learned that tells us what's going to happen the next few days? I do the show 4 times a week, every Monday through Thursdays, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's on the channel L.A. Little. If you haven't subscribed and you want to, just reach up in the right-hand corner and do so. And if you really want to take advantage of what I do and understand how I do it, we've got a lot of things here on TA today. I'm not going to spend a lot of time here, but, I'm logged in as myself, so you'll be able to see these things. All these don't show up, but you have, actually let me get logged in because I'm not. You have a lot of tools. What you just saw, if you log in, you get a lot more tools, right? In particular, you get trading signals in Stock Monitor. I had somebody write me just the other day asking, it seems like, from your books, you would have written things to find these better signals. Well, that is what we've done. Trade Signals does that. Stock Monitor lets you monitor those things once you find them. Other tools that help you to do that. There's a lot on this site. There's a lot that I do, communications with the members. In my room, I give indications of what's happening. But not only that, I have cradle-to-grave trades that are live. People can watch. They can learn how to manage their trades. There's a history of everything I do. There's Twitter accounts that are private, alerts basically, that give you the trades that I'm making in these portfolios. If you want to know what we're doing, you want to learn how we do it, just pop over here, hit the Get Started button, and I'll help you get going. As far as the markets, what do they do today? A little bit of a pullback again, but nothing special. The pullback was concentrated pretty much across the board. The banks were down. In particular, the small banks were down. That was because of oil. Oil sold off almost 4% today. And so the push to the downside was centered in the Russell, in the small banks in particular, because every time oil starts to sell off, we start thinking about more defaults. Gold starting to try and turn, down 0.2. Silver already did turn. All right, I don't know that it turned, but silver got a bounce today. Bonds, small bounce. These things are setting up, and in some sense, we're starting to price in what's going to happen in the September Fed meeting. Expectations are growing that we're going to see a rate increase, and I believe this market's starting to price that in. Elsewhere overseas, flat to basically flat in Asia, and you had Europe sell back down some today. As far as looking at these markets, let's pull up the charts, and we can start here with the sectors, and then we'll work our way back to the indexes. Discretionary. So what you're going to find, and now discretion is already, broke a swing point. Anytime you break a swing point on the TA Today charts, and we call that a trend transition, right? You transition trend. And so if we're looking here on this chart, you can actually see that trend transition here with this arrow. That's what it's telling you. What did it break? Well, it broke a swing point low. Here's the swing point low. We don't guess like most still do about what the trend is. We have an algorithmic way of determining what it is, and we let it tell us what it is. And in this particular case, trend is transition, went sideways. You got another swing point low down here. If you break that, you'd go another level down, which means you'd go bearish. Notice as you're coming down, volume's tailing off and it's almost totally disappearing. A little reversal type hammer here tonight. I can't say anything bad about this, so you get a little sell-off. So what, right? That's kind of the way it looks. We'll work our way back the other way. XLV. Got to push down. Clinton did what she is doing best anymore, and that is that she's freaking out the biotechnology stocks. That's pulling down to some degree on the healthcare right now, but again, volume tailing off, tries to push it down, really can't get anywhere. If you look in the safety sector today, that's where some of the rotation went. You got utilities, actually a little bit of a reversal today after a swing point break. Now, many times you'll see a swing point break get an immediate retest regen. Matter of fact, there's a high probability that within 6 bars you'll immediately come back into whatever it is you broke. If you look over here on a weekly, and this is just looking at the, in this case, the XLU, and saying to ourselves, okay, what's it going to do next? Well, in this particular case, right, it's doing a bullish retest and an attempt to regenerate higher. Now, in this case, and it's off this prior swing point high that was broken, in this case, it took, this is the second time down, it took it quite a while to come back for the second time. As it pushed in there here, you had volume escalation, right? And therefore, you came on down and you tried again. Now you're starting to see the volume shrink. This thing got a little doji and under over today. I wouldn't be surprised to see it try to bounce out of here again. And so utilities getting a little bit of a money rotation to them. Consumer durables also had a little rotation today. They're down here. They're actually have already changed trend to bearish on that push down last week. And then on Friday, I believe. And then today, you're coming down trying to test that low again. You've got this high volume low down here. That's where the breakout is. And so you can start lining up bars of significance. And what we do in Neoclassical is we say what is significant on the chart. Not every bar on your chart is going to be significant, just some of them. You need to find them. You need to find them. And the way we identify those things is anchor bars. And when we have anchor bars, then we're able to say that these things are important. These two bars are important. As a result, as you come back to test those lows, that area becomes extremely important. And you can get information from the market with respect to that. This hasn't done a test yet, and if it does the test on volumes light as it is, it's probably going to turn around and hold. Elsewhere, technology, a little range, holding the range. We've got two sectors that are holding up really well. One is tech sector. The other is the XLF. And so when we look at that, tech sector holding a nice little range. If we pull up the financials were down today, but by the end of the day, financials popped around and swung right back up and made another new high. Industrials. The industrials were kind of sucking air. Let's see what they did. And still, they're kind of range trading here as well, up in this higher range. So you kind of had, the push up. Your lows are here. You go back to there, right? You can kind of draw that across. You got a range up into that area. You could divide it, subdivide it. It's not that clean though. That's about halfway. But that's the range right up in the top. Again, folks, everything that we're looking at right now, and I keep seeing things like, all of the big boys are bearish, right? I mean, you go from Icon to Druckenmiller to Soros to, just go down the list. Everybody's telling you gun-like. Doesn't matter who you look at. They're all telling you the same thing. Shouldn't be in the market. But yet this market's holding up. And then I see things about, tension on the tape. Well, the only tension is on the tape for those people that are short and they can't get this market to fall. If you're trying to short this market, you might go broke by the time it finally actually does fall, if it falls. So, I think the thing is that when you're dealing with a market like this, you simply have to stay with the trend. There's nothing to tell you shouldn't. Now, when the trend starts to break down, then maybe you think about it. So, for example, here, XLE, we get a big push down today. Volume doesn't swell. You actually have volume up here at the top. Volume doesn't swell on the way down. Is it testing anything of significance or not? And really, on this time frame, it isn't. If we pull it back and look at it on the weekly, is there anything here? Well, not really. And so if you're not testing any significance, right, a drop like that today, it just doesn't really mean anything, right? It doesn't give you any clues. XLB, let's see what that one did. That one was down pretty good today. Let's see if it bounced back by the end of the day. And didn't. It actually held down there. But again, this is still range, hasn't really done anything. You got these two swing point lows. Now, these are kind of close together. If you go breaking these guys, you could get a pretty good move to the downside. So this will be a pretty good test if we get down there. But right now it's range trade, right? Just like all these others. It's still range trading. About right there's the range. A little bit over it a couple times, a little bit under it. Still range, folks. Range everywhere. Let's go look at the indexes. Actually, before I do that, let's pull up the IBB and then we'll go to the indexes. So IBB, and IBB is just coming down to test that higher volume low, and that will be the test. That's a bar of significance. That's where we'll learn something. Looks like it tested tomorrow. General indexes. Let's start with the S&P and see if there's anything there. No, just a range trade. Today we put out every morning a chart. And we being the mentors, people that I've trained in the neoclassical model. And all they did was apply. We picked them and we trained them. And so now they're training other people. And by virtue of slowly doing it that way, people are going to learn how to take care of their own finances and do it in a safe way and outperform the markets over time. What do we have here? This morning we laid out a range trade and we said that if you break underneath, and I'm just going to point out the numbers here on this chart, but we look at it on a 30-minute chart each morning. It was this area here that if you broke down, you were going to go try to test that area. And it would be a trend down day. And that's exactly what happened, right? We broke that area, we went down, we tested this area, and then we bounced right back up to where that trend down day took place, because that became, on a 30-minute chart, the bearish retest and attempt to regenerate. So in the morning, that's where that chart will start. As far as a bigger picture, right, if you pull it back here on a daily, again, doesn't mean anything, right? They keep trying to break it down, and what happens? Every time they get it down there, the buyers scoop it up a few more shares, and we hang. And today we hang one more time, we do a hammer. Now, I guess we do have a small signal today, and as I'm looking at this, we got a little volume escalation, which says that, hey, we can come do it again tomorrow. So I guess I wouldn't be surprised if, in fact, that happens. Let's see if the NASDAQ confirms it. Yeah, a little bit of volume pickup there. Did the same thing. So that does look like we're going to get another test of that range again tomorrow. Same thing on the NDX. And the Russell was the one that was the worst on the way down. And, yes, it also got volume escalation. So looking at the indexes, we actually do have some small signals here. That is we get a push down, volume escalates a little bit. That says that we can test those levels again in the morning. I think that's probably it. I mean, what do we got here? It's Wednesday. Thursday, then we got the employment number, and we got a Labor Day weekend. Employment number, everybody is starting to price in, or at least starting to get concerned about what that number is going to print. If that number prints very strong, in other words, a lot of employment, then we're going to see this market start to price in more probability of a rate hike in September. Could that bring us down? Yes, it can. How much is it going to bring us down? Well, I've told my members what I think that is, but I'll tell you, I don't think it's going to be huge. A lot of people call in for 10, 20% corrections. I think that's probably a little overboard, to be kind in words. So, my take is here, yeah, you can pull back, and you pull back at any time. As far as should be concerned, should be trying to short, no, I don't think so. I think you use the opportunities to add to your portfolios. That's it for tonight. Have yourself a great one, and I will see you tomorrow. Good night.